As the US and China prepare to revive trade talks in Geneva and the Fed hits pause on rates amid tariff tensions, the global economic chessboard is in motion. Good morning and welcome to another edition of Business Week. Across the Atlantic, the US and the UK sign off on a new trade framework, while the Bank of England cuts rates as forecast. Now, back home in Nigeria, country closes its debt chapter with the IMF confirming full repayment. And on today's show, we premiere our brand new documentary, Code for Change. The film explores how a $1.3 million endowment from Silicon Valley-based Nigerians, Adeni and Gloria Abuedu, is empowering Africa's next generation of software engineers. From shifting global dynamics to local innovation, this is your week in business. I am Abby Owolawi. Let's begin with a look at how the markets performed this week. Starting with the week on commodities performances at Friday, the 9th of May. Oil prices rose, poised for a weekly gain as trade tensions between top oil consumers, China and the United States, showed signs of easing. Now, Brent crude was up by 3.55% on a weekly basis to $63.66 on a barrel, while US WTI crude was at $60.72 a barrel, up from 3.87% from last week, Friday, the 2nd of May. We now move on to the Nigerian Stock Exchange. At the end of last weekday of trading, a total of 459.21 million shares in 15,723 deals corresponding to a market value of 11.16 billion naira were traded. Compared to last week's NGX trading day, yesterday's data showed a 19.9% decline in volume and a 15.26% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 68.33 trillion naira. Let's now take a look at the weekly performance across African markets. Starting in South Africa, the Johannesburg Stock Exchange closed at 91,861.19, marking a drop of 0.51% week on week. In Ghana, the Stock Exchange saw a positive movement with the index rising on a weekly basis by 3.35% and closing at 6,418.69. In Kenya, the Nairobi Stock Exchange closed upward by 1.01%, with the index ending at 126.86. And finally, Morocco's Massy closing at 17,765.3, up by 1.46% on a weekly basis. Now to European markets, we have stocks seeing a positive session on Friday after the UK and US confirmed a trade agreement as investors looked ahead of the US-China trade negotiations set to begin this weekend. The regional stock 600 rose by 0.20% on a week-on-week basis, with the German DAX index up by 1.87% from last week Friday. France's CAC 40 index dropping by 0.34% there, while the UK's FTSE 100 lost 0.48%, and Spain's IBEX 35 advancing by 0.80% on a weekly basis. Finally, let's take a look at Wall Street as at Friday, May 9th, 2025, with stocks edging slightly lower on Friday as investors await more anticipated trade talks between US and Chinese officials this weekend. The Dow Jones Industrial Average trading at 0.04% there, lower from last week Friday, while the S&P 500 dropped by 0.45% on a weekly basis, and the Nasdaq Composite retreating by a 0.45% week on week. And now for some other top stories from across the world. The U.S. Federal Reserve has kept interest rates unchanged, citing uncertainty caused by President Trump's tariffs. Now, this marks the third consecutive meeting without a rate change, keeping the benchmark rate around 4.3%. Powell warned against ongoing tariffs could fuel inflation, slowing growth and increasing unemployment. Let's have a look.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to to stay as we await further clarity on tariffs and ultimately their implications for the economy.
U.S. Treasury Secretary Scott Bessent stumbled and deflected when asked a direct question about tariffs at a congressional hearing on Tuesday. Let's take a look.
Pays tariffs, Mr. Secretary? No. Answer the questions I asked, please. I only have 5 minutes. Who pays tariffs?
Sorry? Well,
who pays tariffs?
Sorry,
Mr. Secretary, please.
Excuse me.
The question is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question.
Well,
he wants to answer other questions.
Well, Congressman, if the exporters, they dislike tariffs so much, why wouldn't they? If I think what you're trying to get me to say.
Did you remember the question? I'm not sure you did. Who pays tariffs?
It's a very complicated question.
Reclaiming my time. People pay tariffs, right? Reclaiming my time, Mr. Secretary. Reclaiming my time, Mr. Secretary. Reclaiming my time. You clearly aren't going to answer. I'm not going to waste my time having you go,
Now, in the first agreement the White House has made since imposing harsh new global tariffs last month, President Donald Trump outlined a framework for a trade deal with the United Kingdom. At an event held in the Oval Office, Trump stated that the final details are being written in the coming weeks. He also mentioned that the agreement will give American machinery and many other industrial products greater access to the UK market. Trump asserted that the agreement included billions of dollars in expanded market access, particularly in agriculture. Now, Ghana's annual inflation rate eased to 21.2% in April, down from 22.4% in March, marking the fourth consecutive monthly decline. Now, this drop was driven by slowing food and non-food prices. Despite the improvement, inflation remains well above the central bank's 8% target range. The Bank of Ghana raised interest rates in March to combat persistent price pressures, with another review expected in May. Nigeria has fully reimbursed $3.4 billion in financial assistance it received under the Rapid Financing Instrument to mitigate the economic effects of the COVID-19 pandemic, according to confirmation from the International Monetary Fund. The repayment was completed on April 30th, according to a statement from the fund provided to reporters on Thursday. Now, this loan, which was given out in April 2020, was intended to assist Nigeria in coping with pandemic's fiscal strains, economic recession, and a precipitous decline in oil prices. Nigeria would, however, continue to honor further yearly payments associated with the special drawings rights cost, even after the principal has been fully settled. Now, the Federal Executive Council rose from its meeting at the State House, Abuja, and approved a sweeping new policy framework tagged the Renewed Hope Nigeria First policy. Briefing the media on the outcome of the meeting, presided over by President Bola Tinubu, Information and National Orientation Minister Mohammed Idris said, amongst other things, that the Bureau of Public Procurement is set to revise and enforce procurement rules that prioritize Nigeria-made goods and home good solutions across the ministries, departments, and agencies.